So what's going on with Tesla stock right now? Tesla stock is always what people are watching is always most watched, dramatized names in the market. It moves very fast, up and down, and it's a very important stock too because it is in the NASDAQ 100. Sometimes you notice when the stock market is down, it goes up, or when the stock market is up, it is the only one that's going down. Is it a safe haven stock that you go to? Today, let's take a look. Is it worth buying? Although right now Tesla stock is not as popular as before, right now people are talking all the chip names, semiconductors. It is not so popular, but still it's very important stock and it might move, it might blast out of nowhere. So let's take a look where to buy and take profit for the near term. Let's look at Tesla 3 months outlook. This time, let's look at the fundamentals first, decide whether it's a buy or not. Then we look at the technicals because if it's not even a buy, then we don't even need to worry what is the buy point, right? So let's look at the simple ones. 4 PE. 4 PE is like the regular PE, but forward looking. You're looking at the future. 4 PE is at 185. It is very expensive compared to NVDA, other popular stock. It is high. So that's one of the red sign to determine you want to buy or not. If you pick 5 determining points and 3 out of 5 it's a no, then maybe you want to skip the stock, right? Next one, free cash flow. It is positive. It has 7 billion. Not bad. They have cash to move around. No debt. That is a good thing. Revenue growth. It is how much the company sales have been increased over time. We want the company to keep growing, right? Not shrinking. It is at 13%. It is okay, but not that great. So next one, PEG ratio. It is price earning to growth ratio. It is like the PE ratio, but add growth rate to the factor. It shows whether the stock is cheap or expensive relative to how fast it's growing. It is at 4%, which is overvalued because around 1 is about fair value. They matches PE, matches the growth rate. Less than 1 is undervalued, which means it's a good price. You might dig in, like NVIDIA. More than 1 is overvalued, okay? You're paying more for the growth. So it's at 4% now. It's sort of like a red flag. Lastly, ROE, return on equity. It is how much profit a company makes every dollar that the shareholders invest. So it's like how efficient the company is making using shareholders' money. We want the company to be efficient making money. It is around 5%, 4.9. Compared to Nvidia, Micron, it is low. So that's another judgment point you want to take into factor. You have a comparison point to other stock, right? Usually below 10 is weak sign, around 10 is okay but not great. 15 to 20% is good, above 20 is very strong, excellent, right? Like Micron. So fundamentally, it is already maybe not a buy right now. It's already a skip indication. However, if you do want to buy, let's look at the technicals. Where to buy? Right now, it's below 200 SMA, as you can see. Since the year opened around here, it was up and then down. Looks like a lot of the time it stayed down. So Tesla is one of the stock is unpredictable, black swan, so to speak. So if you do want to buy, I think right now 380-ish, this area could be a buy, and then take profit at 417. You could take profit at all-time high. However, we don't know what's going on. Elon Musk is a genius. He do a lot of things. So for me, just to be safe, take profit at 200 SMA, and then we decide we want to buy some more or don't, right? Because yes, it might blast through and keep going, or it might hit the 200 and then come back down. The safer way, at least in my opinion, take some profit and then decide whether you want to keep this stock or move on. That's why I mentioned 3 months outlook. We don't know what's going to happen in the future. The market moves very fast. The technology moves very fast. I don't recommend buy and hold forever, to be honest. And where to cut loose? That is the tricky point. It is already below 200. So there isn't any good indication where is the cut loose point. I would use the prior low. This is the year low, around 337. So if it comes down here and keep going down, you don't see any sign of rescue, you don't see any sign of living, then maybe you want to cut loose and move on, because it can't be volatile. It can't keep going down until 300 or even lower. As you can see, it is possible, and even to 70. Always keep in mind where is your cut loose point, and also when to add, where to add. If you do decide to buy and you want to keep adding to Tesla, I think 360 to 380, this zone is a good add point, because you have a cushion right here and you have a take profit right here. So if it ever just chop around here, you can add some more and see if it has a chance to go up. We can't take profit at the top, but we can always take profit when available, when the market gives you a chance. Lastly, important dates for Tesla. The earning is coming up July 22nd. Expected move is 10%. This could be a chance for it to come back up, stand up firm upon the 200 SMA and then keep going. Or it could be a chance it swing lower and stay down lower as well. What do you think? It is a good buy? That's it. Thank you for watching. I'll see you next time.